Good afternoon, everyone. Jason here. Today is February 28th, and this is your aftermarket update. All right, so this is the third day in a row of really nice trading days here at the Oil Trading Group. Apologize I was not able to get a video out. I'm not able to get a video out every single day, and the primary reason for that is, for those of you that know a little bit about what's going on with me personally, I have a high school age son who plays a fairly high level of high school baseball. We travel around a lot with baseball during the summer, and that has started up here again. And so the tournaments, etc., have really kicked off in earnest. And so I may not have videos out the rest of the week. It just depends on how the schedule works out. I know that tomorrow we've got a mid-afternoon doubleheader, so there may be no video out from me tomorrow, but we'll have to, that remains to be seen. Anyway, that's the reason why you haven't seen many videos here over the last few days. We've been really active with that. So anyway, enough of that. Let's talk about the trading day. As we started into the trading day here, we spent time every trading session kind of analyzing the market, what we expect to see on a particular day. And as we were going through it here today, we talked about the fact that this 4-hour chart had a little bit of a consolidation feel to it. You had a 1, 2, 3 triple top right here into this triple bottom. You draw this trend line up, and these bars, these red bars here, weren't quite formed up when we were talking this morning. And then, of course, you had this 2 points here connecting this trend line, and that gave you this symmetrical, a little bit of a symmetrical look to it, right? The symmetrical triangle look. Now, one of the things that we talked about is this 61.78 this morning was going to be a sweet spot retracement. So if you're not familiar with that, if you've done the extended trial, that is one of the setups that we give you in our extended trial package. It's a $47 package that gives you this particular setup, how to determine where this red line was here, and I'll tell you why that's cool here in just a second. We give you that OTG risk analyzer and some extended trial days in the trading room. But what I want you to look at here is you came down to 75, our sweet spot was 78, and this market rallied all the way to 64, I believe. Let's take a look here. But we'll put the label background on here, and we'll make the label just so you can see it here. Okay, so that's 86 ticks on this move, right? That was an 86 tick move off a dead red candle on the 4-minute bar all the way up into this 64 area. And the reason that area was important is if you come back here, this dotted line, there was a low here. We came down into it, rallied. This is a 4-hour chart before selling off, and that's kind of what we've broken down into these quadrants. So it rallied right back up into this previous area here where you found some resistance, and of course it sold off back to the downside. Today was crude oil inventory report day, so we didn't do a lot of trading prior to the number. I'm going to talk to you about actually how we got into that trade to get to that target down there today, and it has a lot to do with this 30-minute chart. We'll start here. This is the 100-period SMA. And market kind of rallies up into that and then begins that sell-off right at the inventory number. We did break down through the 200-period SMA, but that 100-period SMA really did give you some support, correction resistance, and almost made it up into this trend line here. So that was kind of our clue to look at the market to try and get short here. If you come back into, let's see here, we'll take a look at this 60-minute chart. Again, a symmetrical triangle. Measured move off of that symmetrical triangle could take you down as deep as 60, 62. We may be looking for that particular area tomorrow. This peak up and this rally up also confirmed that's 61.80, right? This is 61.80. We'd identified that. So you had two studies telling you 61.70s would be a pretty decent place. You had this particular idea on this spike up, and you spiked up into it here. And so 61.80 was a pretty good place, obviously. And then, of course, we'd be looking to target on the break of this symmetrical triangle all the way down somewhere between 60.66 to 60.75. That may be on the agenda for one day this week. But let's talk about the mechanics of how we got into this position today that we did ultimately get into. We had a couple of things that we were looking at. So as we were heading into the open here today, this is the daily structure signal. We talk about kick the signal, pay the target as our particular idea. Now, we talked about this in the trading room, but candidly, we did not take advantage of this opportunity because it happened right at the open, A, and B, we were in that in that range here before the announcement, where the market does have a tendency to kind of go sideways. And so despite the fact that kick the signal, pay the target would have worked out, we did not take that opportunity this morning. But what we did end up taking, the opportunity that we did end up taking, of course, there's the push up into that 100 period SMA on the 30-minute chart. We did come down through the daily structure target. And then, of course, we have the announcement today. So this blue line down here represents basically the halfway point between your structure target and structure extension 1. This was our idea here today to get long. We thought that this market, if it pulled down into that, just overshot the daily structure target just a bit, kind of like it did on the structure target above, that this 25 area would be a legitimate place to look to get long. And so we did actually get long down here as it pushed down in here into this 22 area. Market does rally back up to 35. That's where we look to get safe. We get taken out of break even. The market pops down just a little bit further, right down into the daily structure extension 1. Market rallies up and could not get back over our structure target, where you're going to see me get in again is at 24. Now the tape is going to be a little bit off, not a little bit off. You're not going to hear me talk about getting into it. I'm going to have, what I did is I was in the middle of an ES trade, and so instead of cutting into that video, I'm just going to put a pop-up box showing you where we did get in at 24. And again, we got in short at 24. We felt like that because we could not get back to the structure target and that we were just rotational around this 24 level, that this would be a place to look to get short. And what we were going to be looking to target was that 61.80, 78, and we had a third study here, your dynamic support resistance overnight levels down here at 61.75. Keep that number in mind. So as the market comes in, it immediately starts to sell off, and then right down, and you'll see here that your market maker levels provided you with the exact location. So we had 61.78, 61.80, and of course 61.75. These are all targeting areas. We end up getting taken out on the retracement back up through this area. We didn't give too much back. And then the market rallies today all the way back up to this market structure signal. That also happens to be that area that I showed you on the chart. And then, of course, it just works its way back down again until you get to the pit close and you have your new set of market structure signals form up. So that's going to be one of the trades of the day that you're going to look at here today. It was a really handsome CL trade. The other trade of the day, really nice trade, was the ES here today. So if you were in the trading room with this, you saw me take a 2.1 lot stop on this. I tried to get long here off the daily structure signal, and I get long on this pullback, right? It missed me here initially. I get long on this pullback. We were looking to target up to 27.60, 75, and I get stopped at a 2.1 lot trade there. So that was minus. That ended up being a minus $100 trade. So market rotates around, comes back up into the daily structure target, and then we were looking again to get short underneath this structure signal. And so the market comes down. We don't quite get in yet. And boom, on the close and pull back underneath here, this is when we get in at the daily structure signal. And so what we talked about in the trading room is looking to target at the structure mid, maybe this structure signal, and if all heck was breaking loose, we'd come down here to this 32. And so the market rotates around, comes down to this daily structure signal. I wanted to show you where I get stopped out. So settlement today is at was at 47, 47.5. You had this high up here at 49.25, and I'm at 49 on the stop. You may say to yourself, I get in short at 55. You may say to yourself, well, why didn't you just pull yourself up over that bar? And we actually talked about that in the trading room, and I decided against it because I wanted a nice even 6-point ES move. And then what happens? Boom, right up into that area, right up to that, and then the market begins to sell off down to the daily structure signal. So we got in short at 55 off the structure signal, and it came down. We were going to be looking to get real aggressive on a 15-point move down to that daily structure signal, but it did clip me out just a hair early. All right, so kick the signal, pay the target. If it pays the signal up above, then you're looking for it to pay if it kicks this signal and pays this target up above, which it kind of did, right? It got to within a couple of ticks, then you'd be looking for a retracement back to the target underneath you at 32.75. Market continues to rotate around the structure mid, pulls back, back and forth, and then eventually comes all the way down and takes out that structure target. So again, kick the signal, pay the target is the memory nomenclature that we use here on your ES, and that's exactly what it ended up doing today. Now, it did come back up into some of these areas after you found support at the original structure signal, but the fact that it could not make it up to the structure target still gave you hope for this particular move down below. Anyway, what I'm basically trying to say is that there were opportunities all over the map here today, and although we don't take every opportunity that gets presented, there were opportunities all over the place. And again, you can see how the market just continued to sail to the downside here as the session kind of broke up, and this gives you a little bit of that push to kind of where we are here today. So anyway, I've got 2 trades on here. There's actually 3 trades that you're going to see on this video here, this trade of the day video. You're going to see me get into a short on the ES. That's the one that's short at 55. You're going to see me almost simultaneously get in long from 25 on the CL. I get taken out at break even at 25, and then eventually I get short again at that 24 that I showed you at this blue line here on the CL, and that's the one that we carry down for about 40 ticks, I think, if memory serves. So, all right. I feel like I've talked a lot here. Hopefully you got a good sense of why we did what we did today. So without further ado, here are those OTG trades of the day. Yes, I'm at 55. The stop here is 58. The target underneath you here is right now the target is structure signal at 40. Underneath you here, structure signal at 40 is the target on the ES. Long is 25 on the CL. Come on, ES. Okay, I got popped in at 25. If we get up to like 35 here, I'm going to get to break even on the stop. The target now is 59.